Before we formally get going, I just want to take a moment and honor the memory of a very close friend of mine that died just short of 2 weeks ago, Russ Wallace, who was perhaps one of the very best used car directors that I've ever had the opportunity to know. Died tragically on June 29th on his 42nd birthday in a motorcycle accident, riding with his 16-year-old son. And I have to tell you that not only is this a great loss for myself and my family, but it really is a great loss for the entire industry. Russ Wallace was, as I said, just one of the brightest, most progressive, innovative used car directors I've ever known. Hardly a day goes by that I don't talk to a group of dealers and reference the success of the Bill Marsh Group, their used car operation led by Russ. And it's going to be a loss that will be great upon me and my learnings and my teaching. And I just owe a great deal to the Marsh organization and to Russ and his family for having given me the gift that he blessed me with for so many years with his friendship and knowledge. And I just want to acknowledge his passing. But on a happier note, here we are, midsummer, July. NADA recently released its annual report, which I would encourage everyone to reference. You'll find that at nada.org. And what NADA does as a service to the industry every year is they do an annual recap of the year that has ended against the prior year. So in this case, they just recapped the entire year of 2010 and compared it to 2009. And I think it's appropriate to begin this seminar to review some of the high-level used vehicle department trends that NADA report referenced. So just a couple of high points that I think are worth noting and putting into some perspective is, first of all, total used vehicle department sales as an industry in 2010 rose approximately 21% over 2009. And if you break down that 21% increase in sales dollars, what you'll find is that roughly half of it came from actually selling units of a higher price point, and the other roughly half of it came from simply selling more vehicles. So to be sure, based on the NADA research in 2010 and our used vehicle departments across the country, we sold more vehicles, more volume, but we also sold vehicles of a higher price point. But perhaps of greater interest and concern to the audience is some of their findings on used vehicle department gross profit. And in fact, what occurred in 2010 is that used vehicle gross profit as a percentage of sales rose. It rose from 11.49 to roughly 13%. And if you equate that into dollars, that's about a $277 average front-end gross profit increase, which I think is kind of interesting because contrary to common perception, often mine included, it seems that the amount of gross profit that we made on the sale of these used vehicles in 2010 rose significantly over 2009 by, as I mentioned, $277. So I thought that that was kind of an interesting finding and one definitely worth pointing out. The total used vehicle department gross profit, I guess, averaged about $1.39 million dealership-wise, and that's up a whopping 42%. So not only is the average gross profit in 2010 on used vehicle sales up, but also obviously a very significant increase total used vehicle department gross profit. And then when it comes down to the dealership net profit, there was also a very significant increase in dealerships' net profits, up to $629,000, which is about a 60% increase over where it was in 2009. So with those numbers referenced, here's kind of my concern that I'd like to voice to everyone here. and that is that I sense that optimism in the dealer community, and there's certainly cause for some optimism. We, referenced by these numbers and others that you'll see in the NADA report, we can see significant improvement in 2010 over 2009, but, that's both the good news and the bad news. So, it seems like a good increase, but in reality, what we all have to keep in mind is that the reference point for the increases was 2009. Can we all remember what happened in the fourth quarter of 2008? The economy went in the tank, and 2009 was perhaps the worst year economically that dealerships experienced in decades, and I don't know, perhaps forever. So, we can all sit here and feel pretty good about increases in 2010 and perhaps in 11 as well, but what we have to remember is that the baseline for comparison is an absolutely horrendous year. And I guess therein lies much of my concern, because the reality of this business, and the one that none of us should ever forget, is the fact that it is a business of extraordinarily small net-to-sales margins. NADA tells us that if a dealership makes 2 to 2.5% net relative to their top-line sales, they are operating efficiently. Now, put that in perspective. That means for every dollar that comes in the door of the dealership, if you're able to keep 2 to 2.5 cents when it's all said and done, our industry deems you to be successful. And I thought it might be relevant to compare that net-to-sales margin of car dealers in America to some other big business in America. And I specifically reference a couple of retailers, because obviously we are retailers in the retail automobile business, but I also referenced some non-retailers, specifically the tech industry. But even if you look at the retailers, the difference between 2 to 2.5% and 6+% margin is dramatically different. And the fact is that I would defy anyone to show me a business as large as the retail automobile business that operates in America on a net-to-sales margin smaller than the retail automobile dealer does. So, what does that mean? Well, that means that although we've experienced an improvement, we are still operating businesses of very, very small margins. And when you have a business of such small margins, what that means is that your bottom line is highly sensitive to your top line. And I think that, although there's reason for some optimism, I think that the real message I'd like to convey, here midway through 2011 is the fact that it is incumbent upon all of us to remain extremely diligent about not just cost control, but efficiency. I think in the end, the efficiency of a dealership will ultimately prove its success. But I do want to reference one specific concern about costs that I believe to be the most significant risk for automobile dealers today, and that is interest rate exposure. To be a car dealer, almost by definition, means that you have to be a borrower. We operate with floor plans, we operate with mortgages, we operate with credit lines, equipment, loans, and leases. And for that reason, all of these exposures make us highly subject to risk of interest rate variability. And I just want to very quickly outline a scenario that I think is entirely within the realm of possibility in the next 12 to 36 months. And let's just focus on one very typical dealership loan, and that being their mortgage. Let's assume that a dealership has property valued at $3.5 million, and let's further assume that they have 65% of that mortgaged. That would be $2.275. And at a present interest rate scenario, which I think is reasonable, 4%, the annual interest payment on that mortgage would be about $90,000. Well, if you were to assume that interest rates could go to 8, which is not unreasonable, There's a lot of macroeconomic trends that are setting themselves up for potential inflation, and with inflation comes interest rate rise. So I don't think it's too far-fetched to at least model an interest rate scenario of 8%. But if you were to do that, the total interest annual payment on that 2.275 loan would go from 90 to approximately 180, would essentially double. Now, NADA also tells us that average dealership profitability was $629,000. If you added an additional $90,000 or a total of $180,000 interest expense on that one mortgage loan alone, that would take the net profit of that dealership down to about $538,000, or a 14% reduction. And that's just one of the many loans that bears exposure for a car dealer to interest rates. Imagine what would happen to that remaining $538,000 if the floor plan line goes up, if the credit revolver goes up, which surely they all would if the mortgage went up. So I think you can fully appreciate the fact that while things seem to be getting better, we are in no way out of the woods as an industry. And again, my greatest concern for the viability and profitability of your dealerships today is your very careful containment of costs and efficiencies. And, you know, efficiencies or lack of efficiencies in your operations, unfortunately, don't show up directly on your financial statement on a line item. They just get baked into the overall numbers. So I would, you know, really urge you to think about how efficient your operations are as essentially a cost of your business, and be sure that they're as efficient as possible. So a little bit of a warning or a cautionary note, I guess I would say, to sort of temper maybe your enthusiasm or your optimism with the moment that we're experiencing. And I appreciate the moment where things seem to be getting better for us, but remember that we're still in a very risky small margin business, and we have to really dot our I's and cross our T's on everything. Now, as far as the used vehicle market in particular is concerned, I reference a chart here that I got from Tom Webb, the chief economist from Manheim. And as some of you or all of you may know, Manheim publishes an index on a monthly basis, and that index references what's happening, I should say, to wholesale prices. So if we look at the Manheim price index back to December of 2008, we can see it at a low point of 98%. And what you can see through June of 2011 is that that price index has gone all the way up to an unprecedented 127%. So what this macro trend shows us is something that we are all painfully aware of, and that is that price of used vehicles obviously have just continued to go up, 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 and up. But what's really important to understand are two facts. One is, after a great deal of discussion that I've had recently with Tom Webb, what I've come to really understand is that this is not in a short-term or even intermediate-term consequence. What we're experiencing is the new reality. It's the new status quo. If you look into the future and you look at the number of vehicles being purchased by the traditional sources that provide us nice, low-mileage, clean, used cars, they in no way, shape, or form show us any reason for optimism in terms of greater supply in the future and consequently lower used car prices. I guess the biggest hole in that supply chain would be that we will not see in any time in the future, I believe in our career, we won't see the crazy overproduction of new vehicles and consequently the very aggressive manufacturers' buyback programs with the rent-a-cars. I mean, we can all remember the days when rent-a-car companies could buy cars, run them in service for as little as 3 to 6 months, put a couple thousand miles on them, factory would buy back and feed them through the auction. Those days are gone. They're just not going to come back. and consequently we're not going to enjoy those vehicles. The leasing of vehicles has resumed again, thankfully, but not anywhere to the level of a market selling or leasing 17 million used cars. So maybe 2013, 2014, we'll start to see some of these lease cars come back, but these are not going to be the low mileage, late model cars that we often depended on to supplement our sales as program cars. We're not going to see trade-ins at the same extent that we've seen them. So I guess my point here is that, you know, it might get a little bit better than it is today in 2013-14, but it's not going to get appreciably better. These high wholesale prices are a reality that's here to come, and no one should really believe otherwise. So, you know, get used to it, and, you know, we've talked a lot in the past about adopting new strategies to buy cars, to source cars, which I'll talk about here before we finish today. But the point is that waiting for cars to be traded in, going to your local auction and believing that you're going to, you know, have your way and buy a truckload or two of cars for the right prices, and depending on those means as your you know, primary strategy for sourcing enough used cars to remain profitable, is just not, it's just not wise. You're not going to have enough options there. So we've talked a lot in the past, and I know that many of you have adopted new disciplines of sourcing, and I think that that would, if you're not already on the track, that would be a really wise thing to do. And, you know, I think really what this calls for is, I think it calls for new functional groups within the dealership. And I don't think it's reasonable any longer to expect a used car manager to alone fulfill this task of stocking our lots. I think we actually have to develop new positions and new talents in the dealership to do that. So, you know, that's the first meaningful takeaway that I offer you from that Manheim price index increase over these years. But there's also a very important secondary lesson contained in these numbers, and that is that if you look carefully within each year, what you see is that there's a pattern of prices within the year going up, leveling off, and coming down. And with few exceptions, you can see those occurring generally in the late spring or summer, meaning that when vehicle prices within the year, the micro trend, are at their highest is usually in late spring, early summer. And you can see that pattern. And then they start to level off and come down. A little bit of exception here and there to it, but generally that's the trend. And this is proven to be the trend this year in 2011. What you can see in the Manheim Index numbers is that prices began to level off in June. Now, what does that mean for us? That means for us that many of you are sitting out there with lots of cars that were purchased in the months of April and May. And those cars were purchased at high values, and now we're coming into the time of the year, and the headlines, by the way, support the premise here, that we're coming into the time of the year where these prices are leveling off and quite possibly may go down relative to those same vehicles' values in the first and second quarter of the year. So what does that tell you? I mean, would you want to be going out and buying a lot of cars at the very top of the market, where I believe we have to be right now, if not just slightly behind the top of the market? As to me, is that what you all ought to be doing right now is selling, selling, selling very aggressively. You know, I've had experience working with many of you here now for, you know, the past 5 to 6 years, and I'm telling you that I can discern a pattern that is sort of like, you know, watching the same movie and over again. You just know how it plays out, and that is that, you know, we're all heroes in the springtime. I can't tell you how many dealers call me, you know, in the months of April, May, March, June, and they say, oh my God, Dale, we finally got this velocity thing figured out. You know, we're pumping cars out, we're making money, we're doing good, and guess what? It's springtime. It often isn't the fact that they got it all figured out. It's springtime. I mean, can we not recognize that we become heroes in the spring, and then, you know, we go into these months that we're headed into now in the summer, and because we are the eternal optimists that we have to be in this business. We believe that we've got this thing mastered, and it's going to continue at the same pace. We continue in July and August to keep buying cars, believing that this year is going to be different. And I'm telling you, it's often not different. Those same dealers who, were so confident in the fall are often find themselves confident in the spring, I should say, often find themselves in the ditch in the fall. And then we have to spend another 6 months working themselves out of it, and the whole process seems to repeat itself. So, I guess, I don't want to throw cold water, be a wet blanket on anyone's enthusiasm, but I guess I just once again want to temper everyone and say, look, we're probably at the top of this wholesale used car market. It's probably the top of the selling season right now. And, you may have it figured out, but chances are that you're getting a pretty strong tailwind from simply the calendar. So I guess I'm just saying to you guys, this is the time of the year to be selling down. It wouldn't hurt you to, really slim down your inventories, get yourself in a position where, come September, you could afford to be an aggressive buyer in what will likely be a low point of this very high used car wholesale market. So, let's put it in perspective, and let's recognize that there are macro trends, there are micro trends, and there's year-over-year comparisons, but let's just keep it all in perspective. We're still operating in a very tenuous, very uncertain marketplace with very small margins. So, I think we should just try and keep this bus running right down the center of the road at a consistent pace. So those are sort of my mid-year observations. I want to provide ample time today for questions, and I'm willing to go over the hour for anyone that wants to stay on. But I don't want to miss the opportunity to beat the drum that I've been beating hard all around the country for the last 6 to 8 months. And that is that I really have come to understand only in the last year to two the power of metrics that are derived from top-tier third-party classified advertising sites like Cars.com and AutoTrader. Some of you have heard me say this before, but what these sites are like giant voting machines. I mean, do you guys recognize that there's probably about 1.5 million used cars each on these sites, and people every moment of every day are voting on the cars. They're voting on your cars with their mouse. And what I've come to understand is that you can tabulate those votes. And if you understand just some very basic language of those tabulated results, it is extremely powerful in terms of knowing what to stock and how to price these vehicles. So the example that I want to take you to is one that I'm really hold in high regard, and that is, with permission, I'm going to show you some data from a dealership called Woody Butts Chevrolet. And some things you have to understand about Woody Butts Chevrolet is that they're in a very small town of Cochran, Georgia. Cochran, Georgia is a town of roughly about 3,500 people, and the entire county is only about 11,000 people. So a fairly sparsely populated place, and yet Woody Butts Chevrolet today consistently does about 100+ retail per month. And I've witnessed this occur, and why has this occurred, or what has allowed this to occur? Well, certainly much brilliance on the part of Woody Butts Jr. and his management staff. I mean, these are some of the smartest, most aggressive, innovative operators that I've come to recognize. But more specifically, what these guys have done is they've turned that little dealership down in Cochran, Georgia into a regional selling center, largely by leveraging the power of online third-party classified advertising. And specifically, they've turned that dealership into a vehicle detail page factory, a VDP factory. Now, some of you know what I mean when I refer to terms like VDPs and SRPs, vehicle detail pages, and search result pages. If you're unfamiliar with these terms, it's a pretty big gap in understanding used vehicle management today. I would encourage you to go to vAuto's website under Tools and Resources. I've done seminars on the subject, and they're free, and I would encourage you to listen to them and learn what SRPs and VDPs are. But essentially, what I've discovered is that there's a mathematical correlation between the number of vehicle detail page views a dealership gets and how many used cars it sells. But surprisingly, or less well understood perhaps, is the fact that the dealership determines largely how many vehicle detail page views they get, not the website. You know, we have this common perception as dealers that if we wrote a big check and sent it off to those guys, we've done our job, now it's time for them to do theirs. And in fact, that it couldn't be further from the truth. When you wrote that check and sent it off to AutoTrader or Cars.com, all you've done is paid to play the used car classified advertising game. And if you don't know that game, if you're not good at playing that game, then with all due respect, you should sit it out, because the expense of it is too great and the opportunity is too important not to play it well. So what you can see of Woody Butts is that they turn their inventory retail about once a month, 12 times a year. And in many times of the year, they even do better than that. So a little dealership in a small town selling about 100+ used vehicles retail is pretty impressive. But, you know, how they do it is what I really want to convey to you and what I want to convey to every dealer, because it's all under your control. So what I'm going to show you within vAuto is how we take some of the very important key SRP and VDP metrics from Cars.com and AutoTrader and bring it into perspective in the inventory management process. Now, most, if not all of you, understand by now that I'm vision impaired, so I'm going to ask Susan, my assistant, to help me show you just how loudly these SRPs and VDPs speak to you as an inventory manager, a used car operator, if you're paying attention to them. So Susan and I have identified 4 vehicles that are in Woody Butts' inventory for 14 days, and each one tells us a story. And I want to show you how these cars are talking to you, giving you very important cues in terms of what they need or don't need. So Susan, help me with the first vehicle, please.
Okay, and we're just waiting for everything to load up here. 1 second.
Right. And again, while we're waiting, if any of you have questions, I'll be happy to answer all of them. If you just type them into the box here in just a few moments, we'll begin taking and answering questions.
Okay, so our first vehicle here is a 2003 Toyota Tundra. It is currently showing 3,988 SRPs, 155 VDPs, converting at a 0.9% rate.
Okay, so here's what the first thing that I know as an inventory manager, if I'm Woody Butts. I know that I've got a Toyota Tundra in stock for 14 days, and it has gotten an incredible amount of search result page exposures. In other words, what that tells me is that people in Cochran, Georgia are searching for this Toyota Tundra or ones like it at an extraordinarily high rate. I mean, close to 4,000 searches where his vehicle has appeared is an extraordinary performance of any vehicle. So the cue that gives me as an inventory manager, if I'm Woody Butts, is, hey, I would like a lot more of those on my lot. Now that, you know, might seem contrary to gas prices, but listen, you know, the big voting machine in the sky has spoken, and I can't rationalize it necessarily. I can't explain it. But what I know, if I'm paying attention and I understand what these metrics tell me, is they tell me that tons of people are looking for a Toyota Tundra in Cochran, Georgia and the surrounding areas. But further, the fact that they've gotten how many VDPs, Susan, 150?
That's correct, 155.
For a 3.2 conversion?
3.9.
3.9. What that tells me is that as popular as the Toyota Tundra is, Woody's has gotten more than its share of vehicle detail page views. So in other words, his vehicle has appeared close to 4,000 times in 2 weeks on a page of vehicles, 25 a page on AutoTrader, 50 on a page of Cars.com, but that is not really the important metric. The money metric is how many times did somebody find his car so compelling out of the other 24 or 49 on the page that they'll click down on his car and at least for a few moments visualize, think about, consider, and possibly imagining his Toyota Tundra. And what we know from experience is that on AutoTrader, a benchmark for that is usually 2.5 to 3%, and maybe about a point higher on on Cars.com as a benchmark. Now, don't be confused. There are reasons why those benchmarks of conversions from SRPs to BDPs are a bit different from AutoTrader and Cars.com. They count them slightly different. They work mechanically slightly different. But the point is, what we know is that 3% would be a great conversion rate on AutoTrader. His has gotten 3.9%. So if you're Woody Bucks, what this tells us is that you'd like as many of those Toyota Tundras as you can find, be willing to pay up for those vehicles, and should he even think about dropping price on his vehicle? And the answer is absolutely not. When you're getting close to 4% of SRPs to BDPs AutoTrader, and after 14 days, that does not justify any sort of price decrease at all. So very important information came to us by just analyzing the SRP, VDP, and BDP conversions. Let's just quickly talk about a couple more here, Susan. What's the next one?
And just so that you know, we're having some issues showing my screen. It comes up and then it goes out, so I am working on that. Hopefully you should see it now. The next vehicle is the 2008 Ford Edge SEL. Currently has 433 SRPs, 10 VDPs, sitting at a 2.3%. Okay.
Now look at this. Same 14 days in inventory. This Ford Edge has gotten 400 and some search page views versus close to 4,000. Now, you know, I might think that a Ford Edge is a pretty desirable car to have. But once again, what did the big voting machine in the sky tell us? No matter what I might think, whatever I might think gas prices might do to encourage people to shop for Ford Edges, the results are the results. You can't argue with them. In the same 14 days where 4,000 people shop for a Toyota Tundra or searched for it in the Cochran, Georgia area, only 400 people did that for the Ford Edge. So what cue might that give you as an inventory manager? Do you really think you want Ford Edges if you're a dealer in Cochran, Georgia? I don't think so. But my instinct would have told me probably just quite the opposite. My instinct might have told me that you know, big trucks are maybe not the thing that people are looking for down there, but in fact they are, to the exclusion of what I might have thought would be a popular car. But also the fact that this Ford Edge has only converted 10 of those 100 SRPs into VDPs, which is a 2.3% conversion rate, is slightly below par. So does that suggest to me that maybe this particular Ford Edge to go away as quickly as Woody wants to make it go away needs a price adjustment? I think so. So once again, you can see a lot of valuable decision-making information about what to stock and how to price these vehicles. And we could go on, but the point is this information is available to all of you. Now, it's available to you from the back-end tools that both Carscom and AutoTrader offer you. In the vAuto solution, for those of you who know it, you can pull these merchandising metrics right into your display page so that as you look at important indications like your percent of market, your V rank, and your market day supply, you can also see what the big voting machine is telling us in terms of popularity and desirability of these vehicles at the prices that we have offered. So I offer you this technique of internet management, or excuse me, used car management. To be sure, what I'm displaying here is not internet management, it's used vehicle management. It just happens to be used vehicle management in the 21st century. So if you're not familiar with these terms of SRPs, VDPs, and conversions, I would encourage you to get with your reps. They are people who are qualified and eager to help you understand it. How to turn your dealership into a VDP factory, as Woody Butts has done. And I've seen hundreds of other dealerships now of all sizes in all parts of the country literally redefine themselves into regional selling centers, because what they're doing is they're taking meaningful feedback from the marketplace and putting it into their decision-making process of both stocking and pricing. And then finally, before we turn it over to questions, once again, some of you have heard me speak about this, but it is just right around the corner, and I think it's potentially a game changer for all of us. And it has to do with the decision that I had to sell vAuto last October to AutoTrader, because what I perceived is with the family association of being acquired by AutoTrader, and as many of you know, Manheim is owned by AutoTrader's parent Cox, I imagine something that has become reality, and that is that today vAuto sits squarely between what is undoubtedly the preeminent wholesale marketplace of Manheim and the preeminent retail marketplace of AutoTrader. And if I can't connect those data points from those two marketplaces in a way that provides dealers value, then something drastically is wrong with me. So we have been working on this very hard for the past 8 months, and very soon, and I suspect it will be September, I'm going to bring to you a new perspective and a new technology to solve what I consider to be perhaps your greatest challenge today, and that's the sourcing of the right cars and doing it for the money that makes sense. So I show you a diagram that begins to explain the approach that I'm taking. And essentially, it begins with the recognition, as I stated, that a site like AutoTrader is a big voting machine. And today, I'm able to tabulate the results, essentially the winners, for every market every week. I can now see in our development lab, we can see the vehicles in every market every week that are getting searched for the most. But that only tells you a small piece of the story. What we've actually developed are 5 attributes of desirability that we determine to be most important for a vehicle to have. And obviously one of those attributes is to be, a big vote getter, cars that people are searching for. But other attributes that make them valuable to you has to do with their availability to be purchased in the wholesale marketplace, has to do with their spread between what you can likely buy them for and what you have to retail them for. Others have to do, another attribute has to do with the volume and the pace at which they sell through the market. So today, with complete visibility to both the retail and the wholesale marketplace, we've developed 5 attributes of desirability that we grade from 0 to 100%, kind of like a test score, if you can imagine that. So taking 5 exams on every car and getting a score between 0 to 100%. And then what we've done is we've played around with the weighting of these scores, and once each attribute gets scored, we weight them and then we convert it into a letter grade like you get in school. So it might be an A+, an A, an A-, B+, B, etc. And what these letter grades tell you are essentially the most important points of desirability of a used vehicle. Now, once we've identified those vehicles in every market that get the highest grade point average, we will pre-populate those vehicles onto a section of your buy list, along with a number that we believe you can justify paying for the vehicle. Because remember, not only do we know which vehicles in the market are getting the most votes based on searches, but we also know what price point now they're getting the most votes. So likely what price point you're going to need to put it in at in order to get a reasonably fast sale. So we will begin soon to pre-populate a section of your buy list with these vehicles of the highest grade point average, with an amount that we feel you can justify paying for those vehicles without you lifting a finger to get that information. But then further and importantly, we can automatically search through the wholesale marketplace, the Manheim network, and identify all of the auctions in the country or the region that you've designated where those vehicles might exist, and then we can rank order them, show them to you in rank order in terms of which auctions we think are likely to sell those vehicles for the least based on the most recent sales of those vehicles at those auctions. And then when and if we find those matches, we'll send you a text message, an email, and we'll say, hey, you know, out of the 21 vehicles we pre-populated with a grade point average of S or better, we found, making this up, 8 of them. Come and approve. So if you come, you approve, you click, it will submit the proxy bid for those vehicles. We'll also allow you to designate a grade, a condition grade. And if and when those vehicles are purchased, it will notify you and automatically, within a matter of minutes, post those vehicles on AutoTrader complete with photos, descriptions, and prices. So all of this can be done turnkey, I believe, without any intervention, any effort on your part other than to approve. And I think that, you know, with the unique position that we now have situated between Manheim and AutoTrader, you know, this is potentially a game changer for the industry. If this works, and I believe it will work, but I don't want to be overly confident until I actually see it work, but we're testing it now in our lab, and it is thrilling, I guess is the only thing I can tell all of you. It's thrilling. I've never been more excited about anything that we've innovated to date than what we've got here. I believe that this is potentially a game changer. So as I said, for those of you who are vAuto dealers, this is right around the corner for you. We're looking at September, and just can't be more excited about that. So, you know, that's a bit about what's coming. That's a bit about where we are today, what I think we can expect in the future. And at this point, what I'd like to do is to open it up to questions. So, Susan, do you have some there?
I do. First question comes from Justin Brunn. Dale, Mike Hills from Akron Toyota. We took your advice to be retailers and not speculators and continued to price our inventory to sell as well as avoided the speculative buying at auction. We've seen the major downward adjustment in prices already on our core Toyota products. What are you seeing regarding general market conditions regarding cost to market and the ability of those dealerships that did not take your advice to retail those cars purchased at auction?
Yeah, thank you, Justin. I appreciate the question. You know, Justin used a vAuto or velocity term called cost to market. Many of you are familiar with that, but essentially the definition of cost to market is that we take what you own a vehicle for and divide it by its average retail asking price. So to use simple math, if you owned a vehicle for $9,000 and that vehicle's average retail asking price in your market today is $10,000, you divide the 9 by the 10, and we get what we call a 90% cost to market. Well, here's what I know. I know that, and for those of you who are vAuto dealers, you can verify this by looking in your knowledge network. What I know is that dealerships today are having average cost to markets in the mid-80s. I would say to you, Justin, that if you have a cost to market today that is much over 84%, I believe that you're going to have difficulty selling enough cars to be satisfied with what's left over. Because what we know is what it takes to sell a car today is a price point that typically would put you in the low 90s to high 80s. So unless you have about 60% margin spread there, I think you're going to have a great deal of difficulty being profitable or having enough profit left over to make it worth your while for having taken the risk and the effort. So I think that you need to really think about maintaining a cost to market less than 85%. I'd like to see it no more than 84%. And let's also keep in mind that there are 3 components to your cost to market. Number 1, what you pay to acquire the vehicle. Number 2, what you pay to recondition it. Number 3, if you pack it, how much you pack it. So, you know, when some of you think about your cost to market relative to the benchmarks that I provided you with here and in your knowledge network, you also have to think, you know, about those all 3 components of that. But I see dealers today that have cost to markets in the high 80s and low 90s. In fact, I spoke with a dealer earlier this morning that had an overall cost of market in the mid-90s. Now think about that. If you own your vehicles for about 5% of what average, and I stress average, retail asking money is, I would say you got a pretty big problem. And again, my warnings and cautions that I've issued all of you today is that if you're not careful, given this very high wholesale marketplace, you can find yourselves there, in another couple months. So some dealers are there today. The best dealers that I know are owning their cars fully reconditioned, in many cases certified, ready to go in the low 80s. So if somebody thinks that that can't be done, there are plenty of individuals in the country and on the seminar that are doing it. But they're not doing it the old-fashioned way by waiting for these cars to be traded in or going to the auction, just buying whatever they think they should buy that day. They're doing it using new disciplines. Next question, please.
Next question comes from Jim Lindberg. Where was the SLP VDP example on the vAuto site?
Okay, Jim, if you subscribe to vAuto's merchandising module, you have the ability to configure your inventory list to pull those SRPs and VDPs right on your inventory page. And if you're not familiar with how to do that, we'd be happy to show that to you. Simply contact your performance manager and they'll show you how to do it, or contact me after the webinar. But you have to subscribe to the merchandising module, which I think is about $100 a month, and then you can pull those numbers through. So again, if you have any problem, let me know.
We have two questions from Ryan Chapman. They relate to each other. He says there are only 4 photos for the Edge. Does that correlate to the VDPs? And the second question is, does the number of photos have anything to do with the VDPs?
Yeah, thank you. I really appreciate you bringing that to my attention. It certainly has a lot to do with the fact that the vehicle is not converting SRPs into VDPs at the expected rate. Every bit of evidence from both Cars.com and AutoTrader shows us that people are more likely to click down to a VDP page from an SRP listing that says that there are more photos, lots of photos. People want to see imagery when they look for vehicles on the internet. So yeah, thank you for bringing that to my attention. And you see, what's really fascinating to me is just how identifiable and controllable these issues are. So if you have a vehicle in stock that's converting below the expected benchmark rate, and you bother to go to the SRP page and look at it, you'll see either the thumbnail photo, the one that was in the first slot of the photo file for that vehicle that happened to make it to the SRP page, might have been a substandard photo, not your best, or it says that you don't have but 4 photos there, or your price, or your seller's notes description on the SRP page in the case of AutoTrader. You can see where the deficiencies are. If you bother to look, if you bother to notice, and you know how to fix it, it absolutely makes these cars stand up tall and perform. So yeah, it has everything to do with it.
Also from Brian Chapman, how often do you need to change the descriptions? Is there any empirical data to support your response?
I don't know. No empirical data that I know about. I would like to think that if you have really good descriptions from the get-go, you shouldn't need to change it, but I suppose it doesn't hurt to change it so long as the new description is equally as informative. But, listen, this is important, I guess, for everyone to understand. AutoTrader has a difference from Cars.com to the extent that on the SRP page, it allows you to put an abbreviated description of the vehicle. Depending on what subscription level you have, it could either be 150 to 250 characters of description. And that description on that SRP page on AutoTrader is some of the most valuable frontline used car real estate that you own. And to spend all the money to get your cars these SRP pages and not take great care to be sure that the seller's notes, those abbreviated descriptions on the SRP page, show absolutely the most value added differentiating features of your vehicles versus the other one just like it on the page, is a sin. I mean, don't do it. Don't spend the money if you're not prepared to go that last mile to be sure that your car is positioned to get more than its share of VDPs. but I don't have any empirical data suggesting that is of value. Sorry.
Next question comes from Scott Dibble. Do Cars and AutoTrader count VDP and SRPs the same?
No, conceptually, SRPs and VDPs are the same, both Cars.com and AutoTrader, but the sites work mechanically a little bit different. That give you some different results, and therefore I would discourage any dealer from trying to compare the absolute numbers of SRPs and VDPs from one site to the other. But what I would absolutely encourage every dealer to do is to track the trend in aggregate and vehicle by vehicle of SRP and VDP attainment for that site relative to itself, if not day to day, at least week to week. Because I'm telling you, how these cars perform on the SRP and VDPs on these sites is more under your control than theirs. And the dealerships who know how to control these things just have enormous advantage. And I'll give you guys a really insightful tip on this point that one of our performance managers, Jason Rice, just explained to me, and that is, as dealers, we are we're very prone to pricing a vehicle, sort of at the $995, let's say $14,995 level. But you want to know something? If you price a car at $14,995, anyone searching for that vehicle in the range of $15,000 to $16,000 will not see that car. At least on AutoTrader, it won't come up. If you were to price that car $1 higher, instead of $14,999, price it at $15,000, you would come up on a $13,000 to $14,000 search, as well as a $14,000 to $15,000 search. So it's kind of like being on the cusp of the zodiac sign, maybe, if you think about that analogy. But the point is that, the way these search engines work and return results have some nuances, and your understanding of those nuances is absolutely the art of used car management in the 21st century.
Next question comes from Larry Alexander. Cars.com versus AutoTrader. Is it absolutely necessary to have both, or is one membership more important than the other?
I think they're both excellent sites, and I think the best of both worlds is to have both. I think there are strengths and weaknesses of both sites, but one of the other interesting statistics that NADA study that I referenced earlier shows is still to this day, and I might have this wrong, but I think I'm fairly accurate. Still to this day, only 30-some% of dealers' ad budgets in 2010 were internet related, and that really blows my mind because today, at least for used cars, the internet is the shopping marketplace, much more than the street, much more than the newspaper, much more than the airwaves. So, I guess and I know this isn't practical or realistic for every dealership, but I'm just befuddled to think that, at the expense of being on both Cars.com and AutoTrader, we're still spending money in newsprint. I still don't know that I really get that. And I'm not saying it's never right, but I think the best opportunity is for you to be on both of those two primary used car shopping marketplaces, if you can.
Okay, we had a question emailed to us earlier from Bob Furman. With the domestic recent small car successes, do you view the future greater participation of buyback rental program as inevitable? Leasing still seems to be best a far-off source of used vehicles. Still difficult to see where a source of low-mileage used vehicles will come from. New vehicle sales competition is a constant, but all benefits go to the new car dealer first. It appears the independent used operator must become competent in reconditioning a high-mileage product at below new dealer cost structure to secure a place in the huge used vehicle market. Thanks for all you do, Dale.
Oh, thank you. A couple points, I think, in that question, if I understand it. And the first one I think I've addressed, and that is don't expect those low-mileage, program cars to return. I think that day is gone. I think, generally speaking, used cars are getting older, and that's what we're going to have on our lots. So I would not expect those cars to come back. But you also referenced a really important point, and that's the reconditioning process. I'm telling you that that the day of inefficient reconditioning is still here. Unfortunately, I think it's the last bastion of progressive used car management. The fact that we still continue to believe that we can take excessive liberties in the expensive reconditioning vehicles and pass those on to the public. You just can't do that like you used to do. So I think you hit it, squarely on the head when you said, the competitive advantage of low-cost, high-quality reconditioning. It's huge, absolutely huge. And any dealership today that is getting, full-bore, over-the-top reconditioning of these cars has got to be at a competitive disadvantage in the marketplace. So, I would strongly urge any dealer in the spirit of creating efficiency of their operation to do that. And guess what? The service manager won't make less. The service manager will ultimately make more. And there are dealers that are on this webinar today with us who can attest to that dealerships whose used vehicle, whose mechanical department don't receive full retail for the reconditioning, they actually make more money, because at the end what happens is they do many more vehicles. But just like the used car department and the velocity-minded approach to used vehicle management says that, it's okay, it's all right to make a little less per vehicle if you sell a whole bunch more of them. It's not a bad thing. And the same concept applies to the reconditioning, the mechanical repair of these vehicles. If we have to take a little bit less per RO, but we can increase the number of RO count by 15, 20%, at the end of the day, we make more money. But, this old world thinking that we got to maintain the highest possible gross profits, whether it be on internal repair orders or on vehicle transactions, is the sort of thinking that makes the velocity dealers, guys like Woody Butts and so many other smart ones on this webinar, so successful.
Next question from Brian Chapman. With your new tool, why only Manheim? Why not all of the sellers on the Internet?
Well, thank you, Brian. I appreciate that question, and we will show you, we will look into the entire wholesale network, but the level of integration that I'm able to achieve with Manheim is stronger as a result of our family relationship. So my ability, for example, to see where these used vehicles are that we pre-populate on your buy list will certainly go beyond Manheim. However, my ability to see what these vehicles have been selling for at each auction, so as to be able to tell you which one of those auctions might likely sell you those vehicles for the least money, depends on my ability to get transaction level data, sales data from Manheim, which would previously not have been available, not available to anyone else, and presumably I could get that data from other wholesale networks. So it will certainly have components of it that will go well beyond Manheim, but Manheim's generosity with their data as a family member allow us to do some things that we just simply can't achieve with others.
And we're approaching the top of the hour here. We have probably about 10 more questions left, but we will continue on for as long as you want to stay and listen. From Bill Miller, is there any way to check Carfax for a one owner or a clean Carfax? And this is referring to the new process.
Yes. There absolutely will be, and for those of you who are on unlimited packages, you'll just go to town on that. And I think what you're saying is, we will specify if you submit a proxy bid for a vehicle of a certain condition grade and one owner and that sort of thing. The answer is yes. Thank you for that question.
From Austin Thompson, going back to the buying feature, I believe you said it was going to post the vehicles for us online automatically. Is correct? If so, whose pictures will we be using? Another dealer or the auctions or third parties? Hope the question makes sense. Austin.
Yeah, Austin, thank you. The question makes total sense. Our initial implementation will be that you will have the ability, if you choose, to use the auction photos. And I recognize that those are not the best photos, and they're not probably your ultimate photos, nor should they be. but they're better than no photos. But I also, in the spirit of your question, I think should give you the option to put maybe a coming soon placeholder there, or perhaps a stock photo. So I'll take that question under advisement. But the way we initially have it designed to allow the auction photos, and then when the vehicle gets to your inventory, you can reshoot the car and replace those photos. But to have those vehicles fully marketed online within a matter of minutes, I think will absolutely speed up the whole selling process.
And while we're on photos, we have from Bill Miller, what is the benchmark for the number of photos?
Yeah, as many as you can, Bill, because, I mean, here's the landscape. Somebody's going to be looking at a page of 25 cars, just like yours on AutoTrader, 50 cars on a page in the case of Cars.com, and every one of those listings contains what I call the photo bait. The photo bait are words that appear on each site right around the single thumbnail photo that's on the SRP page that says to the shopper how many images they'll see if they were to click down on your car. And, there's no magic right number, but if you've got 15 and the ones above it and the ones below it have 30, chances are they have a higher probability of getting the VDP. The VDP is related to the show-up. The show-up's related to the sale. So if the ones above you have 99 and yours has 30, once again, odds are that they're going to get more VDPs than you'll get. So, as these sites allow you all to upload more photos, the bar gets raised. And, this is a little bit of a point of frustration for me because digital photography is about as close to free as you can possibly imagine. Sure, there's some time and effort involved in doing it, but to draw the line on not taking all and uploading all of the digital images that these sites will allow you to put up there, to me seems to be sort of an illogical place to draw the line on expense or effort if you're going to spend the money to get to your cars to these pages for the first place. Remember, the only thing you're doing when you're on these sites, or the only experience, I should say, that a shopper has that benefits your dealership at all is when they get to a VDP of your car. So, you're fishing for VDPs on these sites. Would you go fishing with, no bait? Would you go fishing with skimpy bait if you had the ability essentially for the same price, to have great bait?
Okay, next question comes from Stephen Brown. Any plans to do much of the same with new cars?
New cars are deceptively tricky. I've gotten a lot of inquiries to new cars. I think that as new cars become more prevalent online, which I'm seeing happening, we might in the future be able to do some things with new cars. But, pricing of new cars is pretty tough because the new car market is very incentive-driven. Fortunately, not as much as it used to be, but it's still very incentive-driven, and the comings and goings and vagrancies of incentives makes it very difficult to project recent historical trends into current market and future, near-term future markets. So we've struggled with that one, Stephen, and it's primarily a data deficiency and an incentive challenge, and we're constantly working on them. So we do a lot of things with new cars today, but the vAuto thing is proven to be more difficult than it might seem.
Next question comes from Mark Ray.
Hey, Mark.
I've been working to get my inventory on a 45-day turn, but have struggled with my 20 oldest vehicles. If I'm getting good SRP and VDP numbers, should I stop lowering the price as long as photos and comments are good?
I think so. I think so. I mean, I think if you're getting a lot of SRPs and VDPs and these cars are still getting aged on you, the problem is likely not to be with the price. I mean, we all know there can be a lot of issues. It could be what we own the car for, and, is there a sufficient inducement for a salesman to actually want to sell the car? The car could have some, obvious or less than obvious issues mechanically or aesthetically. So, I think that, price is probably not the problem if you're getting more than your share of VDPs. And if this is Mark Gray from Groganstown in Toledo, there's hardly anyone smarter about this than you are.
Okay, from Larry Alexander, in the South Florida market, we have a dealer that offers off-lease cars very successfully, selling about 400 vehicles per month. They make no claim of servicing their vehicles whatsoever. price point is their success? Do we need to service our pre-owned vehicles or save the money to more aggressively price?
Yeah, and I think, Larry, I think I know who that dealer is that you're referring to. And you know what? That's the reality of what I referred to earlier. And this reconditioning issue is a huge, challenge for dealers today, because probably like you, Larry, I was brought up in the used car business to really understand the value and the importance of reconditioning vehicles. But today, in this highly transparent internet pricing environment, reconditioning cars in the nines, which I'm not sure I'm saying not to do that. I guess I'm just saying to do it with every single bit of efficiency that you can, I think is ever more important. So should you offer cars without any reconditioning? Hard for me to give you that advice, but I will tell you that I'm seeing more and more instances of dealers who are willing to do that, or dealers who are willing to offer the car for sale with full disclosure of what reconditioning it needs with a price, a separate price for that reconditioning, and allowing consumers to make a decision whether they want to buy the car, unreconditioned and do it themselves, or have someone else do it, or not do it at all, or have the dealership do it. But, exactly your question underscores the importance of straightening up and cleaning up the whole reconditioning process.
Okay, next question comes from Joe Mitchell. Having an acceptable CTM assumes all steps to presenting a vehicle for sale are right. Buying at the right price, reconditioning to the right level, pricing to available market, and having the right mix along with terrific and ample photos. Doesn't this require a separate individual to monitor all steps and leave the sales floor to the manager to make the deal? Is this a trend that is someone removed from the selling process to deliver products that managers can work on closing?
Yeah, Joe, I'm completely with you on that thought. And I've written about this, and some of you have read it and heard me talk about it, but I actually think that the way we staff our variable operations today is not actually optimal to meet the challenges. I mean, if somebody is good at sales and therefore we make them a sales manager, does that mean that they're good at using a computer, doing data analysis, using a camera, uploading files? Does that mean that they're qualified to do that sort of thing? Probably not. And yet, we consider these sort of things that we've been talking about often to be sales management responsibilities. So I think that the organization of the sales department, I think, is really outdated. And, there are some really smart dealers around the country doing work on this. There's a really brilliant independent used car operation out of Lakewood, Colorado, suburb of Denver, called Automotive Avenues. Bill Green and Steve Bentley, two really brilliant used car retailers, and they actually hired a sophisticated consulting firm to really, process all the things that need to be done in the sales environment and create new functional disciplines, new titles, new positions. And in my opinion, that has got to be the future of this business. Trying to, fit a whole bunch of new technical, operationally intensive sort of responsibilities into the job profile of what is typically an extraordinarily talented salesperson that we might call a sales manager is not the right approach, in my opinion, for today or the future. I really appreciate that observation, Joe.
Okay, from Bill Kraus. Dale, how much of the massive site traffic data collected by KBB.com now goes into your thought processes? In the July post, Alex Gutierrez of KBB warns dealers to unload excess fuel-efficient vehicles sooner rather than later, as he expects at least a 15% correction in this segment by year-end. Alex notes that this segment ballooned 25% January to May this year versus the overall market increase of 5% due to the Japanese earthquake that crippled auto production, the jump in gas prices from $3 to $4 a gallon, and the reduced availability of lease returns and trade-ins. Alex recommends SUVs and crossovers as safe bets during the second half of the year, as their values are down about 6% year-to-date, but should be stable through year-end as car buyers focus more on a blend of fuel economy and versatility provided by crossovers. Best wishes.
Well, thanks, Bill. It's a pretty big question. But, you know, let me just say something. Those guys at KBB are plenty smart. But I have to tell you something. There's no way, in my opinion, to be smarter than to buy in today's market and sell in today's market. You know, we can prognosticate and predict what's going to happen here, what's going to happen there, and we sure all like to do that. But I'm telling you, as a retailer, you're not a speculator, you're a retailer, and if you just simply follow the rules of buy in today's market and sell in today's market, you won't get hurt. And also remember this, Bill, there's no such thing as a bad car. There's no such thing as a bad car. A gas guzzler car in a $10 a gallon gas environment is not a bad car. There's only a bad price for a car. I mean, for crying out loud, people, you know, people are buying cars to scrap them, to crush them. And are those bad cars? No. If you can get them for the right price, they're great cars. So, you know what, when markets shift radically, as it seems to be more and more is the case in this environment, what that does is it creates buying opportunities. But, you know, I'll buy a convertible in August. If I can buy it for the right number, I can sell it. So, you know, just remember that no matter what all the prognostications are and predictions are, just buy in today's market, sell in today's market, and buy for the right money, and you'll be good. And you don't need to, you know, think too hard beyond that.
Okay, from William Hunt, I have noticed that luxury brands tend to show lower VDP ratios. Do the premium brands tend to bring more window shoppers? If so, is it enough to make a difference by interpreting the VDP ratio?
Yeah, that's a really good question, William. And I'll tell you that one of the things that we're now doing, but I don't have empirical information yet to share, but I will soon, is that, you know, when I spoke of those benchmarks of VDPs and VDP conversions, you know, in reality, those are pretty gross, high-level numbers. What I've come to understand is that you're right, certain types of cars and certain year cars perform better, get more VDPs, convert better. So one of the projects that we're working on now in our development department is we're going to be able to break down and provide you in vAuto with a benchmark of what that car, that type of car, or that year type car is converting in your market relative to yours. So, you know, you've hit a pretty good point here that there are variances depending on years of the car. Older cars might perform better than newer cars. Luxury cars might perform less than volume cars. And I should be able to, and I will be able to give you what is the appropriate benchmark for every year, make, model car in your market for that day. And that's, you know, another really exciting benefit of having the family relationship that we have now with AutoTrader. So stay tuned. We're right around the corner from giving you that sort of very micro level analysis. But, you know, the fact that you guys are starting to get tuned in to what these numbers ought to look like, should look like, I'm telling you is the most hopeful, optimistic sign that you can give me, because what you're really beginning to signal is that you're in tune with the retail marketplace. By reading and understanding and tabulating those votes from those voting machines of AutoTrader and Cars.com, it says that you're getting tied psychologically, motivationally into the market, the retail market, which is the right place to be.
Okay, we have two similar questions here. The first one from Josh Van Ness. Will the new buying software inside of vAuto be included in stocking or an additional add-on that will cost more money?
Well, you know what, for those of you who know me, I don't believe, you know, unless there's something that I have to go out and buy or pay for, I believe that as a provider of a solution to a dealer, it's our responsibility to keep it growing and improving. So for those of you who know, you know, how we do business, you know, that's how it's my intention to do it. And, you know, there's just responsibility of serving and, you know, keeping the solution, you know, in the front and competitive is just what we ought to do. That ought to be our responsibility, not yours.
Also on the new tool from Kevin Orozco, are we going to be able to set the distance on the buy list on this new tool?
Yeah, absolutely.
And our final question from Larry Alexander. Some dealerships are utilizing salespeople for vehicle selection alone. The customer is then handed off to the F&I director for closing. Grosses seem to be higher along with closing ratios. Your thoughts?
Well, yeah, I guess maybe I've seen some of that too. There's also, sort of a converse approach as well. One of the most, intelligent, brilliant, successful operators is Ed Mark in Boise, Idaho. And, what these guys do is they have the salesperson take the whole process from start to finish with an F&I guy. So, I guess whether you do it, Larry, the way that you outlined or the way that Ed Mark does it, I think that the bottom line here is how do we get a car sold to a customer for the right amount of gross, the appropriate amount of gross, which has more to do with how we buy than how we price it, and doing that transaction with the greatest amount of efficiency. Efficiency isn't just what you pay people to process that transaction, but also how good they are at doing it. So, I don't know that I know what exactly is the right formula, but I really love and appreciate the innovation that many dealerships are showing in terms of figuring out alternative methods to getting a car over the curb at a more efficient, profitable level. So, keep innovating these approaches, Larry, and I think that if you iterate it and keep trying different things, you'll hit upon the thing that works right for you.
And one other one, and from Larry, he just said thank you. One other one from Austin that you may have answered. He says, how many pictures is too many and how many would be too few? Is there a range for a perfect number?
Yeah, I don't think there's too few. I think as many as you can put up there. I mean, the competition are the other cars on that page, Austin. So if you have 50, but the guy above you and below you has 90, 50 is too few. If the guy, has 20 above you and below you, 50 would seem to be sufficient, but 90 would be better. And then obviously the quality of those photos is really important as well. Anything else there, Susan?
Just a thank you from Stephen Brown, and that looks like everything.
Well, in conclusion, let me just once again thank all of you for attending and let you know that whether I do business with you or not at vAuto, I am open to helping anyone that I can. You don't have to pay me anything for my time. It's my privilege and passion to do that, and I'm very appreciative of everyone's efforts who have helped me acquire the knowledge that I have. And I just want to close the way I began and tell you that we should all just pause for a moment and give a prayer for Russ's family and the good, hard-working people at Bill Marsh who were similarly affected as I was. We truly lost one of our best, and I think that I should put a perspective on life that we all need to live every day as if it might be our last, and maybe not go out looking for trouble. So there you have it. Thank you all, and I look forward to talking to you again soon. Have a good day.